Here's how you're actually going to be able to write off travel with any of your family members. My name is Anna and I help clients all over the country play the IRS game just like the wealthy do it. When you have a business, you need to make sure that you have a board of directors. This is a simple piece of paper that includes all the information for your business, name, address, and then you're going to be adding those people who you want to be on your board of directors. That can be your mom, your spouse, your wife, your baby daddy, whoever you want it to be. Make sure you add them to that document. That way, when you decide to travel and you want to make that a business deduction because you're talking about Q1 goals or you're having a retreat just to mastermind on what the future of your business is, guess what? Your husband is on there. So now his plane tickets, the entire hotel, the meals can be written off for everybody, not just for myself. But you have to actually make sure that you add anyone to this board of director template. Now, you can also remove people if they make you mad. Then you can't write them off anymore.
I enjoy the spirit of what's being shared here. It's just I believe that in most contexts, this would likely fail an audit. I think the first problem we would have is the concept of the business trip itself, right? See, in order for that business trip to be deductible, it has to be primarily for business. It can't be mostly for a family vacation or a family retreat. Second, I think we may have a problem with this non-paid board of advisor who just also happens to be another family member or friend. If you look at what the actual tax code says and the rules and regulations and guidance that the IRS has issued over the years, and all of the court cases that have come about because the IRS actually fights these types of strategies, you see the term employee used when it comes to a legitimate, authorized, and upheld deduction when it comes to business travel. And that makes sense, right? A business employee going on a business trip for the company, it makes sense that their related travel expenses would be deductible. But that non-paid board of advisor, I think you could have some challenges substantiating the reason why they're there and the need for them to be there. Thirdly, it has to do with the actual business deduction itself. In order to be deductible, an expense must meet a variety of different tests, right? You have 162A of the Internal Revenue Code as an example. That's a two-part test, and that means that the expense must be both ordinary and necessary in order to be deductible. And ordinary means within the context of your industry, it's normal, right? The business owners typically would have this type of expense. And when it comes to necessary, well, that's a little bit more of a gray area, but it essentially boils down to being required for the pursuit of revenue generation. Do you want to figure out which strategies work best for you and could actually withstand an audit? You want to sit down with a knowledgeable advisor, someone who understands the full context of what the law is with regard to certain tax strategies. Now, I have no idea whether or not that person is me with regard to your situation, but what I do know is we can find out. All you need to do is drop the word apply, and let's see.